Let's get some more on markets now with Mathieu Chabran, co-founder of TKO Capital, a global alternative asset manager with more than $50 billion in assets under management. Mathieu, thanks so much for joining us today. And I'd just like to start with your view on what's happening in the Middle East at the moment, because, of course, the region is no stranger to war, and shipping in the Strait of Hormuz has been disrupted on many occasions before as well. So are there any lessons from your experience observing this conflict, how things might unfold from here and how things might end?
Yes. Hi, Paul. Thanks for having me. And as Jumana rightly said, it's another week starting after that. Many market players, asset owners, asset allocators have been hoped for a short conflict. And unfortunately, it seems that it's not the case right now. Effectively, President Trump over the weekend reaching out to some key allies, to drag them, into this situation, hopefully for the better, highlights that we're going to have as a market participant, to factor in this uncertainty. As we all know, markets, they don't really like uncertainty. A lot of volatility generated, from this situation. But nonetheless, I think that's what we all have to be coping with, is to be investing across cycles. And we might be entering a new cycle, a cycle of much higher energy prices, a cycle maybe of higher interest rates, which I'm sure we can discuss, a cycle potentially of a higher dollar price after the year we had last year, on the back of the Liberation Day. So looks to me a little bit like a new world order, for the asset allocators and asset owners, to consider.
Yeah, well, I would like to discuss the rates environment in a moment as well. But of course, it is your task and others that we have on this show to put money to work, no matter what the circumstances are. And I mean, well, you're in private equity, but you do still have some exposure to public markets. So is this a good time to be dip buying? And I think particularly about the themes around AI that predated this conflict, that they're still there. Is this a good time to go bargain hunting?
Well, I mean, as always, when you have volatility, that creates some interesting entry point, depending on your mandate, and what you're looking for. We at TKO, we are a compounding house. We're looking at deploying capital into strategies and more particularly, mega trends that will generate this compounding return for our investors, and for ourselves, for our balance sheet. And so, rather than timing the market, I think that the opportunity we see right now, which is actually emphasized by this overall situation, is to be focusing on few mega trends that are requesting right now some significant capex, and that will be increased by the situation we are seeing. I mean, your point, about digitalization is one, but obviously this decarbonation and the energy transition is the second one. That is a big investment theme for us, and obviously the defense that is unfortunately highlighted as a key need, once again. And so if you start looking at some few big themes like that, I mean, you can buy on the public market some high dividend yield stocks, we're a credit house, at core, at TKO. So obviously I've been following all the public markets and this investment opportunity that it creates. But on the private side, there's always a silver lining to this challenging situation. And I think that this is opening a cycle where private capital will be required to effectively invest across few strategic regions. Obviously Asia being the main one, Europe being the other one, where we're going to request this big capex program to face what I call effectively this new order.
Now, in this new order, I mean, it may be new, but how enduring do you think it's going to be? Because some of these war-related themes, I mean, things could snap back rather quickly. And let's take the US dollar, for example. It's gaining pretty aggressively at the moment, but I would be curious as to what your outlook for it is at the rest of the year, because when this conflict does end, and it will end, we've still got US debt, spending, inflation risk. Could you see a sharp repricing of the greenback?
Well, I mean, that is, you're absolutely right. And remember where we were a year ago, actually, or close to a year ago on Liberation Day, and the strong movement on the the currencies, and on the dollar. So, I'm keeping a close eye on rates. Obviously all that, as we know, is really interconnected. But to a certain extent, what I was saying, I think that part of the Trump administration was to work on a new paradigm of, as I said, low dollar, lower rates and lower oil prices. And right now, that's not what we're seeing. It's quite the contrary. And so, in terms of allocation, rebalancing, we've been seeing that. I mean, not too long ago, a lot of people were effectively trying to move away from the US dollar, not to the US economy, but from the US dollar. And now we're seeing that that's one of the few safe assets, if I may say, at minimum, what we saw over the past 2 weeks is that it's been strongly benefiting, from this uncertainty. Yeah.
Well, let's talk about the rates environment, because we've got so many central banks meeting this week, and I'm sure none of us envy their task. Let's talk about the Fed, for example, likely to be on hold. But what's the path ahead here? And we're going to get a new set of dot plots as well.
Well, there are certainly some opposing forces, in this whole situation. I mean, I'm not here, to bet on some rates, but just to factor in our underwriting, in all the strategies we're active across. You mentioned credit, which is, by definition, so sensitive to rates. But we could talk about all these big capex. I mentioned, including some, you can talk about the data center. You can talk about, the real estate, and all that will be highly sensitive, to the direction of travel in terms of rates. And right now, the situation, and not to overreact to the past 2 weeks, because we know that it takes a bit more than that, to create a macro cycle. But the spillover effect, short term and potentially, medium term, will be inflationary in some way. I've been touring Asia for the past 10 days. Had the opportunity to meet with our partners in Japan, in Hong Kong. This week, in Singapore, and everywhere you look and you talk to, obviously energy is front and center, and that's a key driver of the cost increase of anyone's business model for as long as they've got the flows. Because, we've been talking about the inventories and the reserves, that are available. That's a stock, but the flow, will be fairly different. And the headlines we read over the weekend, or some pictures I saw actually in Australia, Paul, of people rushing around, for the gasoline and all these things, highlight the fact that there is effectively this concern that will, inevitably, roll into the real economy and these higher costs across the board. So we were already in some part of the world, and coming back to the US and you were talking about the dollars. I mean, we know, and I live over there in New York City, and I can tell you that I don't have the impression that inflation is going down, and that's for the day-to-day of everybody's people, and that's before you had some collateral damages from this whole situation. So right now, a central scenario is certainly not rates going further down. Could they go back up? That's part of the assumptions that we are making in all our underwriting, Paul. Yes.
All right, Mathieu Chabran of TKO Capital is sticking around. We have plenty more to talk about. And when we do come back, we will discuss the risks and opportunities in Asia's private markets. You can hear why our guest thinks growth in private credit and alternatives is set to continue.